Time now for Options Corner. Joining us to take a deeper look at this chart is Rick Ducat, lead market technician here on Schwab Network. All right, Rick, so many say that Broadcom should be a member of the Mag 7, and especially if you look at its performance year to date. So what are the trends that you notice when you take a look at this chart?
Hey, just looking at market cap, Broadcom is now number 7. It's above Tesla and Meta and Berkshire Hathaway in terms of market cap, so pretty practical reason to include it as well. Now, maybe not a household name, Broadcom here, but kind of this quiet powerhouse of the market here. So we can see S&P 500 up almost 13%, tech, one of the strongest sectors, SMH, one of the strongest sectors within tech, and then all the way up here we have Broadcom then up 123.5% here. So really a strong trajectory to the upside here. You can also look at it against the other chip makers here, and it's really quite a mixed bag here. But once again, you can see Broadcom far in the lead here, even above Intel, which has seen a notable resurgence. So if we were to look at Broadcom's candle chart here for the past year now, our old upward channel here has been broken for the most part in white. We saw some big excursions to the upside, especially here on earnings. But typically we've quickly retreated back within those boundaries after these breakouts here that kind of keep grinding upward. Now we have those all-time highs near 403. We also have the initial high point that we saw here near 375 as another downside point to watch. Then we have this range low point right around here near 332. So some downside levels to consider as well. So when we do look at our moving averages, we can see that we are pretty close to our weekly 5-day EMA here in blue. Our 21-day EMA in teal comes in at about 369. So that could be another short-term downside point. Meanwhile, our quarterly EMA, our yellow line here, comes in right in line with our trend line near about 349 or so. So some further food for thought there. RSI exhibiting a gradual decline here, kind of a mismatch between price here. So that does suggest that the trend is slowing down somewhat. The pace of the gains is starting to moderate. Heavy volume here near about 340 to the downside provides us with another look at potential support.
All right, Rick. So what's the approach that you would take for an example trade, especially given the chart patterns that you just went through?
Right. So next week we have earnings on Thursday here. And, you know, the options market shows a kind of an odd situation here. Now, this is the pre-market still. This could change quickly when the open occurs. But so we have our December 12th expiration, about a 5.3 potential expected move. But for the monthly, we have a 3.1 potential expected move here. So seeming like there's very high volatility after this earnings, then perhaps a bit of a slowdown. With that in mind, the trade in question, the example trade, -1, December 12th, 400, 405, call vertical at a $2 credit. So a short call vertical, a neutral to bearish trade, really centered around those all-time highs. That's roughly where we have our break even. The break even in this case would be 402. $200 credit received, $300 max loss. So this is a defined risk trade. You know, we've seen these tech companies lately. They've been very strong here, but a lot of kind of misses after earnings that we've seen. Even when they beat their results, we've seen a bit of a give back here. So this trade would be a winner if we were to just kind of stay below those all-time highs by next week. A short-term trade here. So what we would be looking for then would be the break even, about a 4.4% move to the upside. The expected move range, about 5.3%. So we could potentially see that loss come into play here, but very a curious situation here. It can also be a little bit hard to gauge what you might get in terms of prices when the market opens. You know, we kind of have to guesstimate here based on old activity. One idea you could do is take the spread, chart it. You can chart the option symbols and look for a similar closing from what we have with our mark price here. And then you could see what the option was trading for at that level. So that's roughly $2 here. Could be a pretty different situation when things open up, but that might be a starting point to look at in your trading here. So keep that in mind.
Okay, thank you, Rick. That is Rick Ducat, lead market technician here on Schwab Network, with an example trade there for Broadcom.